Good morning. Thank you for joining us on this SAG-AFTRA live stream on YouTube. To stay informed about all of our live stream and video events, we invite you to subscribe to this channel. You can go ahead and do that right now. Today, we present the President's Task Force on Education, Outreach, and Engagement live stream, Tax Updates for Entertainment Performers. This presentation will begin momentarily. If you have questions that you would like to direct to today's guest, please email PTEOE@SAGAFTRA.org. That's PTEOE@SAGAFTRA.org. As a reminder, today's program is being recorded and you can watch the replay right here on SAG-AFTRA's YouTube channel, along with more great content. Now, please give a warm welcome to today's host, SAG-AFTRA President, Gabrielle Carteris.
Thank you, Shira. Thank you so much. Hi, everybody. Welcome. I'm very, very excited about today's topic, tax updates for entertainment performers. Look, I'm sure that many of you, as do I, have questions about reporting our non-taxable stimulus payments, paying tax on our unemployment benefits, deductible entertainment-related business expenses, learning how to free file your own tax returns and new rules. This is important, new rules that may apply due to COVID-19. So today's presentation is going to actually cover all of that, along with a wealth of information, including updates that you can be aware of for your taxes, stimulus funds, unemployment, other matters that can help you sort through your 2020 taxes before the filing deadline. Yay. So before we go too much further, I would, of course, love to take a moment to say hello to SAG-AFTRA Executive Vice President, Rebecca Damon. Hi, Rebecca.
Hey there, Gabrielle. Can't wait for Sandra.
She's going to be great. So for those of you who may not be familiar, SAG-AFTRA's New York Members Outreach, Relations and Education program or committee is called MORE, and it works to empower SAG-AFTRA members with information related to their business and their ability to effectively manage and take responsibility for their individual careers as union members. MORE hosts activities designed to inspire self-empowerment in the business, including, and this is very important, an annual tax return seminar with today's presenter, Sandra Carteris, who's joining us again this year. We want her every year because she's so helpful. A few years ago, the MORE committee actually began working with other locals to offer the presentation via video conference to members on the East Coast, including New England and Washington, Mid-Atlantic, and each year added more and more locals across the country. So last year, just before the shutdown, the presentation was offered via video conference to every local office with great success. So when the pandemic hit last year and the CARES Act was passed, something that Sandra was very helpful with, brought changes, the CARES Act actually, when it passed, it brought changes to the tax code. Sandra jumped in to give a PTEOE webinar in May of 2020 to help our members understand how those changes affected them. And so she's talking today, I just have to say this before we started. Sandra said, I love doing this because it's really all about the members, isn't it? It really is. And I thought that's what makes her such a great, great leader. We're so glad to welcome Sandra back for the third time. And again, I hope for future. Sandra is a working actor. She's a member of SAG-AFTRA and Actors Equity Association. She's an attorney in private practice in the area of taxes, estates, trust, contracts, and business law. She's also Secretary Treasurer of Equity and serves as the site coordinator of the Volunteer Income Tax Assistance, which is called VITA program in New York. She's been affiliated with VITA as a pro bono preparer and instructor for more than 30 years. She holds licenses in the areas of tax accounting, securities, investments, and law. She's is admitted to practice in all New York state courts, as well as the Federal District Court, United States Court, and the United States Supreme Court. I know, right? And she's an actor. Sandra, thank you so much for being here today. There's so much to talk to you about. I'm really thrilled. So thank you.
Well, I thank you, Gabrielle. In fact, I have to thank everybody here who's making this happen, because I'm always in awe of, especially PowerPoint. But, you know, Kim Walters, these are staff members I'm mentioning now. Kamala Pitoy, Shira Wright, Pamela Greenwald, and many, many other staff members make this happen for us at SAG-AFTRA. And without them, we couldn't do it. And of course, I have to thank the great Gabrielle Carteris and the remarkable Rebecca Damon for their leadership and everything that they do for the members to try and get information out, education out to all of us. You know, I'm just a small piece of the puzzle, but I'm really happy to be part of it today. And I just want to say that we've got a lot of territory to cover. We're going to talk about some new laws, about some things that are happening cutting edge as we speak. Oh, I forgot to mention Bernadine Robbins, who is not on camera, but she is certainly a huge part of this presentation today. So I want to say thank you to Bernadine as well. The information we're going to cover today is pretty vast. A lot of it you've heard about. There's some urban myths out there. I want to dispel a few of those. I want to nail down some detail. And above all, I want to take your fear away from all of this. Because, you know, this has been a year for us. I mean, it's been a solid year. This is March 9th of 2021. And at this time last year, none of us knew what lay ahead. We just didn't. And we've been through this year. Some of us have had caregiving responsibilities and full-time work. Some of us have had no work, and we didn't know what to do with ourselves and how we were going to pay our rent or our expenses. We looked to our unions for help, and we got some help from our unions to the extent that they could nudge the government and help make our voices heard. But I want you to know that wherever you were this past year and whatever you've been through, I think we've all felt a lot of the same emotions. And I just want you to know that as one of your union sisters, I want to be helpful to you, and I hope you'll be helpful to me too, because that's what we should be doing right now. So this is all about tax and, you know, getting those forms filed and figuring out how much we owe or don't owe. It's not important in the greater scheme of things. What's important is your health, your loved ones, the work that lies ahead of us, some of it that we've started ramping up. And if you have questions about this, any of this today, don't feel that this is the last opportunity you have to ask. I will be available to you. You can contact the union. I wish I could say that you could contact VITA right away because, you know, we usually have our telephones on for that, but like a lot of other places, we are suspended momentarily from our operations due to COVID. So, you know, don't hesitate to reach out to the union, and I'll be happy to, excuse me, provide additional information to anyone that needs more information that we can't get today. So, without further ado, let's launch into this. I know that there are a lot of really wonderful PowerPoint slides that I thank the staff for putting together. They're really beautiful. So let's go, let's move. Great. So we're going to talk today about our 2020 tax prep, some 2020 information for your tax returns, some law changes, and what's cutting edge. And next. There are a lot of acronyms this year. The CARES Act, the Secure Act, the HEALS Act, and the HEROES Act. Which one of those apply to you? Probably all of them. We're going to cover frequently asked questions. We're going to talk about filing your tax returns all by yourself, if you're so brave, and I've heard from many of you who've done it, and I've got great stories about that, and or perhaps using some outside services. And all about your state income taxes, how to contact them, and how to get information and instructions about filing your own as well. And we're going to leave time at the end for question and answer. Let's look at the CARES Act. It's an acronym for Coronavirus Aid, Relief, and Economic Security. And among the high points of it were the Paycheck Protection Program, which allowed employers or self-employed people, small business people included, to borrow money to use for keeping staff on or paying themselves. And if they met all the qualifications, they didn't have to pay this money back. So it was a protection program to keep people working. There were also loans called economic injury disaster loans that were available also to businesses, small and large, including sole proprietors. And those had to be repaid through the Small Business Administration. By the way, the PPP was also through the SBA. I'm not getting the side slides here, so I don't have the detail to give you, but I'm just reading the same slides you're reading. And I don't know if I can get those details slides or not, but if I can't, that's okay. We'll just keep going. So the EIDL loans are loans that have to be paid back over many, many years at very, very low rates of interest. So for those businesses that just wanted some extra money and feel that they have a long term to pay it back, they could benefit from keeping their businesses going. Student loans were suspended during COVID. Now that doesn't mean that they're forgiven, but we'll talk about possible forgiveness in a moment. And economic impact payments and stimulus checks, which many of you have already gotten. And I hope that if you have gotten them, you've been able to make good use of them. If you haven't, we'll talk about how you can get those through your tax returns. And there were also special funds for pandemic unemployment, which many of you knew was what they called the federal bump to your state unemployment benefits. And those of you who have been receiving unemployment, who qualified for it, also qualified for the federal bump. Next slide, please. So, as I've said, this is large and small businesses. The Paycheck Protection Loan does not have to be repaid if you meet all of the tests, all the qualifications. And next, the EIDL, you could borrow up to $10,000 to support businesses. And some of these loans are going to come back in the new bill, but you know, we don't know exactly what's going to, excuse me, what's going to be passed and what isn't. But some of the big loans have to be repaid. Some of the little ones up to $10,000 do not have to be repaid through the EIDL. Next. Not only could you suspend your payments of principal and interest on some of these federal student loans, and especially even for students who had to withdraw from school or had to relocate because of the pandemic, but the bill also, the CARES Act also provided tax-free employer-provided student loan repayments of up to $5,250. So you could get that as a benefit through your employment if you had it. Next, please. And the economic impact payments, or what people were calling the stimulus checks, these are non-taxable monies, not taxable at all. If you're eligible, you would have gotten $1,200 if you were single, $2,400 if you were married filing jointly, and $500 or $600 for dependents, depending on which payment period you were getting it for. Now, you probably remember that there were two payment periods. One was in the summer and one was toward the end of the year. The income limitations are $75,000 if you're single or married filing separately. If you were filing as head of household with a dependent child or dependent parent, you could have gotten, you could earn up to $112,500 and get an economic impact check, or up to $150,000 if you're married and filing a joint tax return. That was free money, and you may keep it. If you think that you didn't get enough, then when you file your 2020 tax return, there's a place on the tax return to tell the IRS how much you got, And if you would have qualified for more, or you would have qualified for a second check and you never got it, then you will get it with that tax return. The federal pandemic unemployment was an additional up to $600 a week. And later on in the year, it was reduced to $300 extra federal benefits in addition to whatever you were getting from your state. So they have been extended at least until March, and now they're talking about extending them even further out into the summer. So you should check with your own state Department of Labor to make sure that you're understanding exactly what you're going to get, what you're eligible for, and how far the extension is going to go. And next, please. So the Secure Act, setting every community up for retirement enhancement. Well, during the pandemic, many people found that they had to take money out of retirement savings, even though they didn't want to. And the government said, that's okay, we understand, we're going to give some of you a break on some of this if you're taking it out because you qualify under COVID rules. Next slide, please. So the couple of the new parts of the law is, the first one is that anybody who was taking required minimum distributions, and those of you who were over 70 and a half know who you are. You know, after a while, the government says, well, you have to start taking this out. If you have an IRA, a 401k, a 403b, a SEP plan, you know, you're going to have to take money out. Well, they allowed those people all of 2020 to suspend those payments and not take them at all without any penalty. And they changed the law that if you haven't hit the mandatory retirement, required minimum distribution age, you can now wait until you're 72 to have these required minimum distributions. So that was a change in the law, and people who are approaching that retirement age, many of them are very happy that they don't have to take money out. But for those who did have to take it out, there were some penalty-free withdrawals. What if you were under 59 and a half, and ordinarily you wouldn't be able to take money out of your retirement without some kind of a penalty? Well, Congress just said, nope, there's no penalty. You have to pay tax on it, but you don't have to pay any penalty on withdrawing it. You could also withdraw up to $10,000 from college plans, or what are known as Code Section 529 plans. This is for college savings. People who have children or people who have their own 529 plans know what these are. And if they wanted to take out up to $10,000 to repay student loans, they could do so without penalty, even though those withdrawals would not have ordinarily qualified as tax-free withdrawals. And if you were adopting a child, or you had a new child in your home, and you wanted to take money out of retirement money for help, you could take out up to $5,000 without paying any penalty on those monies because of the Secure Act passage. Next, please. The HEALS Act, another acronym: Health, Economic Assistance, Liability Protection, and Schools. I won't go into detail here, but this was an added law later in the year that kicked in additional unemployment benefits and those additional stimulus payments that I told you about. They were the second half of the year when this came into play, and they realized that they had to continue to help people and help organizations, help individuals, and help communities get back on their feet. So Congress passed this HEALS Act to continue some of those payments. Next, please. And the HEROES Act, Health and Economic Recovery Omnibus Emergency Solutions. Don't you love these acronyms that they pick up? But I mean, they're great. You know, they want them to have meaning for people, but how many of us can even remember what these letters stand for? But it's a great bill. It included some additional stimulus payments, some childcare provisions, more unemployment, extensions of unemployment, and some other provisions that have been very helpful. So for those of us who've gone from month to month to month and tried to figure out how much assistance the government might be giving us, as we've listened to our news reports or the radio or read the paper or looked online for any kind of updates, this stuff has been coming fast and furiously, and it probably has been confusing to all of you, and it should be, because each of these acts was a separate law and had a lot of Sturm und Drang and, in Congress, lots of people arguing about them, but eventually Congress came together and said, no, this is something we have to do now for the pandemic. So those are the big acts that were passed this year. Next, please. Let's go to our frequently asked questions. So, as I just said, you already know the answer to this. Next slide. I got money from the stimulus plan. Is that taxable income? No. But your tax preparer will need to know about it because, as I referenced earlier, it has to be reported on your returns to make sure that you got what you were supposed to get. If you got enough, that's all there is to it. It's just reported. If you didn't get enough, additional monies, and I just did a tax return for someone who got additional stimulus money because she didn't get enough during the year. So, the two sets of payments that we saw, one was the $1,200 payment earlier in the summer, and then a later in the year, much later in the year, people were getting $600. That's if you were single. If you're married filing jointly, you got double those figures. And you also got stimulus money for any dependents below the age of 17 in your household. Now, what this says is there's a third set of payments expected in the new bill, that it's working its way through Congress. Well, it just got through the Senate. It's on its way back to the House. We expect the House to pass it. After that, it will go to the president's desk for him to sign. And we expect a third set of payments to come our way. And we're going to talk a little bit more about that in a minute. Next, please. If stimulus payments are not taxable, why do we have to report the information? Well, I just said because they want to make sure, number one, that you got your payments, and number two, that you got enough of them. So they want everybody to say yay or nay. I got mine, I didn't get mine, I got enough, I didn't get enough. What are you going to get this year that tells you about that? Well, you're supposed to get Notice 1444, Economic Impact Payment. And everybody I've talked to so far has not gotten that form. I don't know of anybody who's gotten the Notice 1444. I'm sure some people have. I just haven't talked to anyone who got one. And so I don't know if you're going to, but I wouldn't worry about it. Just keep track of what you got and let your tax preparer know about it, and make sure that it's on your return. And as I said, if you didn't get enough, you're going to get the recovery rebate credit on your 2020 tax return. Next, please. So I also got unemployment money. I heard that because of COVID, we don't have to pay any tax on this. Is this true? Next. Unemployment insurance, including pandemic benefits, paid to unemployed individuals, business owners, yes, and this year, self-employed individuals were slated to be fully taxable on your federal return and on most of your state returns. This year, however, as I said, there's a bill that is on its way back to the House, and we expect that to pass. Without any difficulty, we expect the president to sign it very soon. This bill includes an exclusion of the first $10,200 in unemployment benefits. So, is unemployment usually taxable? Yeah, it's usually taxable. It's been taxable since 1986. But for 2020, those of you who have had unemployment benefits that exceed $10,200, well, they don't have to exceed $10,200. anywhere up to 10,200 will be able to exclude that. And those of you who got more than that, you'll be able to exclude the first 10,200 as far as we understand now. That's the bill that just came back from the Senate. So this was just a couple of days ago. We're trying to give you cutting edge information here. But as I say in this slide, stay tuned for confirmation. You're still going to have to get that 1099-G form to complete your tax returns. And depending on the state you live in, you might have to go online to your Department of Labor unemployment login and look for a 1099-G to print it out and or save it to your computer, because your tax preparer is going to need that information to complete your returns. Next, please. So I also took money out of my retirement plan, but I'm not 59 and a half years old yet. I think I have to pay tax and a 10% early withdrawal penalty on that money, right? Yes, you have to pay tax. No, you don't have to pay the penalty if you meet the COVID qualifications. So the Secure Act, as I mentioned, helps those of you who had to make these withdrawals. And you could withdraw up to $100,000. Now understand that that's taxable income unless you're willing to repay it within 3 years. And I'm not sure very many people would be able to do that, but let's go to the next slide. Because if you're one of those people, you could. So you have to have met one of the following tests. You have had to have tested positive or been diagnosed with COVID-19, or you've had a dependent or spouse who had the same, or you have experienced financial hardship due to your spouse or a member of your household being quarantined, furloughed, laid off, having reduced hours, being unable to work due to lack of childcare, having to close or reduce your business hours that you own or operate, having to pay, having your pay or even your self-employment income reduced, or having a job offer rescinded, or a start date for a job delayed. If one of those things applies to you, and it applied to many, many people who took money out of their retirement plans, you could have made this withdrawal of up to $100,000 and avoid the early 10% withdrawal penalty. But you still have to pay tax. Next, please. And next, please. Do I pay the tax all at once? No. You may elect to pay it over 3 years, which would be for 2020, 2021, and 2022 by reporting a third of the money in each year. So they've given you a stretch on this. And as I mentioned, you may also elect to repay it back into your retirement plan within 3 years. If you can possibly do that, and you wouldn't pay any tax at all. You'd have the use of it, but if you can get it back into your account within the 3-year period, you will pay no tax. If not, the stretch or the partial reporting is going to really help people spread the burden of the taxation on the monies that they took out by paying over 3 years. Next, please. Are there any other income surprises for 2020? Next. Well, we have a little one, a very little one. A lot of people have asked us about this. I got this 1099 int for $43 and change, or $18, or $72, or whatever it is, and they have no idea what it's from, but it's the United States Treasury. And they say, well, how come I got this thing? It's interest. What did I do to get this? And I said, you probably filed your returns somewhere between April 15th last year and July 15th last year. Remember when the filing deadline was extended? Yeah. So we all took advantage of it and we filed our returns late. Well, when you filed late and you got your refund, the government owes you interest. Yeah, because it's not paying before April 15. So for those of you who got this extra income in this 1099 int form, your you're going to have to include that as taxable income on your tax return. But the good news is you got it. They sent you the money fair and square, you know, because you were allowed to file late and because they issued you your refund late. Next, please. And that's the only, you know, new kind of income that we can think of this year, apart from the stimulus reporting. But the new forms, yeah, there is a new form. I'm sure some of you have seen it already. And we're going to see a lot of these because entertainment professionals who are self-employed or have independent contractor fees are going to get a form instead of a 1099 miscellaneous form that we used to get, you know, for years and years and years. Oh, they had to come up with a brand new one, a non-employee compensation form, 1099 NEC. I have no explanation for why they wanted to do this, but somebody came up with this bright idea, so they've sent it out. Look for it if you're one of those people who gets 1099 forms every year. It takes the place of the 1099 miscellaneous that you used to get. And if you're one of those mixed earners, you have both W-2s and 1099s, you're going to be looking for this. The same rule applies if your earnings from this self-employment or these fees or this independent contractor gig stuff that you do is $600 or more in a calendar year, they'll have to send you one. If it's less than that, they don't have to send you one. But is that income taxable anyway, even if it's less than $600? Yes, it always is. It always has been. I know that's a big disappointment, but that's the way it is. So look back through your records, keep track, and report everything that you have. Next, please. We're going to talk about tax deductions now. Okay, great. Good. So what are the breaks that we're getting this year? Well, there's a little tiny break, you know, not much this year. Things are kind of status quo. They're pretty much the same as they were before. But there's a small deduction that was included in the CARES Act that allows anybody who made qualifying charitable contributions in the form of cash, check, or credit card, not goods donated, but one of those other forms, cash, check, or credit card payments, you can deduct up to $300 above the line. You don't even have to itemize your deductions. Now, you probably remember in the past that you could only deduct your charitable contributions if you had employee business expenses or mortgage interest, real estate taxes, maybe some medical expenses. Now that the employee business expenses were taken away from the itemized deductions, most of us couldn't exceed the standard deduction. So we don't itemize. So those charitable gifts that we made just kind of fell by the wayside. Well, the charitable organizations made a lot of noise about it and said, you know, can you just do a little something, you know, so that everybody who contributed would get a small deduction of some kind. They did this many, many years ago. They took it away. Now they're bringing it back. So for 2020, anyone who has qualifying charitable deductions may deduct $300 above the line. And this goes for whether you're married or single. Next year, if you're married, you can deduct up to $600, but not for 2020. That's for 2021. So, and as I said, it doesn't include household goods or non-cash items. Next, please. And let's talk about refunds. Okay, a lot of people want to get a refund right away and they want to file right away. And that's always good. You know, the earlier you file, the sooner you can get your refunds. But I don't know if most of you might remember last year, the refunds were like molasses. I mean, they took forever to come. Even with, as we always encourage, direct deposit of your refunds into your bank account and electronically filed returns. That's the fastest way, the most secure way, the safest way to get your refunds sent to you. But they took a long time last year. I have every reason to believe that they're going to be slower again this year as well, because we not only started the filing season in the middle of February instead of sometime around the middle of January. So we were about a month late with filing. There has been no indication that the filing season is going to be extended yet. The IRS has said, no, it's April 15, the way it always is, but all kinds of people in all kinds of sectors are asking Congress, please, please extend the filing deadline. I don't know if it's going to happen, but so we do encourage you to file early. And if you want to know where your refund is, you can, oh, by the way, if you're one of those people who has complex returns, earned income credit, child tax credits, and so on, those always take longer to process. So if you're one of those people, you probably already know that yours takes a little longer than people who don't have those credits. If we go to the next slide, yes, and the next one, please. How long will it take? How will I know? Well, we can't predict the processing time if you've already filed or you're planning on filing right away and you want to know if your refund's being processed. The IRS.gov website has a Where's My Refund tool. And you just go on there and it'll tell you whether or not it's in processing. You probably know that IRS staff has been reduced because of budget cuts, and they are operating mostly remotely still, and they're doing their best. I talk to people from the IRS a lot, and they're great people. They work very hard, but there aren't enough of them. So please be patient, do the best you can. If you get your refund after the time that they should have processed it, they'll send you the interest on it, and you can report that next year too. So, you know, they're doing the best they can. Next one, please. And next. So where will we go to get our taxes filed this year? Well, many offices are still closed. And that includes the New York VITA office and the Los Angeles VITA office. The Los Angeles VITA office, operated by the Actors Fund, I am told is closed for the year. The New York VITA office, as you know, is a year-round operation, and we are hoping to open as soon as Actors Equity Association opens up its offices again to staff and members. And when that's going to happen, we don't know, but it'll be posted on the SAG-AFTRA and Equity websites, and in the outgoing telephone message as soon as we know when we can reopen. So if you can't file by April 15th, and that deadline is still in place, and we're hoping they extend it again, but we don't know, you should at least file extension forms. And you can do that both for your federal return and your state returns. You can go online to, as I said, irs.gov, type extensions in the search box, and you'll pull up extensions. Those of you who feel comfortable doing it online, you can e-file your extension online, and if you think you owe money, you have to pay it by April 15th. You can do the same thing in your state. Those of you who are more comfortable with going online, finding a form, downloading it, printing it, filling it out, and mailing it in with a check, you may do that too. Just make sure it's in by April 15th, unless the deadline is extended. So we will, oh, and the actors, here are the websites for any updates on the openings of the VITA program. actorsequity.org, SAG-AFTRA.org, and the actorsfund.org. Next, please. I'm excited about this because I talked about it last year. I've heard there are free online options from the IRS. How do I use those? Well, you know, I've never done it for my own returns, but next, please. Next slide. Yes. So it is completely free, and it's called Free File. I talked about this last year. It was the first time they had tried doing it at the IRS, and apparently it was a huge hit. And I have spoken to many of you whom I recommended try this if you're intrepid and you don't mind venturing out and you think maybe you can take a shot at preparing your own taxes. You go to the IRS website, irs.gov. You type in Free File in the search box, and you will come up with a screen that guides you step by step all the way through. And this includes filing multiple state tax returns. Yes, federal and state returns. And I've talked to some of you from last year who did it, loved it, thought it was the greatest thing, or, you know, not afraid. And I said, even if you think you might make a mistake and you want to try it anyway, go ahead. There is such a thing as amending your tax returns later on if you find that you missed something completely, you forgot to put something in, you did yourself a disservice, or you did the government a disservice because you didn't report all your income or something. You can always get some help. You know, we will be back at VITA at some point, but there's lots of help out there as well to do an amended tax return. And so you can always change it later, but if you want to try Free File, I'm very excited about it. And the most important thing I can say is get yourself organized before you go online. We'll go through the worksheets later, but you know, here's some of the information you're going to need. We don't have to spend a lot of time on it, but last year's tax returns, your social security number, the social security numbers of everybody in your household who is named on your tax return. Next. And organize your information, your income, your social security benefits, unemployment comp, any small business or other business receipts. If you are a landlord, you've got rental, real estate, royalties, partnerships, you know, any of that kind of stuff that comes to you. And I mentioned that Notice 1444 for the stimulus payments. If you don't get Notice 1444, just go back through your records and see if you can remember what you were paid originally. Were you paid the $1,200 and then the $600, or the $2,400 and then the $1,200? Were you paid extra for your dependent children? So organize the information before you jump on. Next, please. And we'll go through my worksheet that organizes all of this, but you know, here's the laundry list, right? These are the things that you have most of every year. Pull those together. Next, please. If you had Affordable Care Act health insurance this year, don't forget that you will, or you should have gotten a 1095A form. A is for the Affordable Care Act marketplace in health insurance program. If you don't have it or you didn't get it in the mail, go online to your ACA marketplace website and you'll find it there. You'll pull it up and you can print it out and include it with the other tax information that you have organized, because you're going to need it to file your taxes. If you don't want to print it out, like some of us who print out everything, you can just save it to your computer, and when you get your tax stuff organized, it's in that file. Okay, next. And of course, filing electronically is, you know, what we recommend for everybody. If you're using Free File, the IRS e-filing system will automatically put you into electronic filing, your federal and your state returns. So you'll have to create a personal ID number. You know, it's your 5-digit PIN. It can be anything you want, but you're going to have to set that up before you finish the completion of your electronically filed returns. Next. What happens if you don't have your 2019 tax returns because you don't remember where you put them, or you have a new computer and that folder is not in that computer for some reason? You can, in the same IRS website, you can get a copy, a transcript of your 2019 tax return. And it will show your AGI, your adjusted gross income on it. And the two options you have, next, there are some, it'll show you how to get a transcript online, and by entering your adjusted gross income, it'll also show you how to register to get the information if you don't already have it. It's a pretty easy tool to walk through. For a while, they were mailing them to everybody, and now they went back to providing them online, and sometimes they are doing a little of both. So they might tell you this is going to be mailed to you within 7 to 10 days, or they might tell you that you can access it immediately online. And the only reason I don't know which one you're going to encounter is it depends on how busy the site is, from what I'm told. So bear with it when you're trying to get this information. The best thing, however, would be to pull out last year's tax information. If you have a hard copy and you can reference it, so much the better. If you've got it saved to a thumb drive or another computer, see if you can locate it first so that you don't have to go online and get a transcript, because it can take a little bit of time. Next. Oh, yeah, this is obvious. If you're going to use Free File, you're going to need a valid email address, because that's how they're going to send you everything. I know that sounds self-evident, but there's some people who either don't want to use their email, or, you know, for whatever reason, don't have one where they can receive the information. And you're going to need an email address if you're going to use Free File. Next, please. So there are other online tools that you can use to file your taxes. I love this slide. This woman saying, I don't know what to do. We don't recommend any of them. Well, first of all, we don't recommend any professional tax preparation providers, because there are hundreds and thousands of them across the country. I would rely on my friends, people I work with, you know, to recommend people they work with. But there are a lot of outfits out there that tell you that they're going to provide you free taxes. In fact, there's commercials about them all the time. This is free, 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 free. It won't cost you anything. This is totally free. You won't have to do it. You just go on our site and we'll take care of everything. I have found over the years, as have many people, that these aren't always free. So we can't recommend any of them to you. The only site I know of where you can get free tax filing by putting in your own information is through the IRS's Free File. That's the only one I know of. So if you're doing some of these other things, you're kind of on your own about it, you know, so just buyer beware. If you decided you can't file your own taxes and you want to use a professional service, I would get referrals from my friends and people I've worked with, because this might be the year that you want to pay a professional. I don't know. For those of you who are waiting for VITA to open, we'll be happy to see you when we can see you, but that might be a while. Next. And this I'm not going to spend a lot of time with, but so we'll just go through these slides very quickly. These have your websites for your home states. If you have any questions about your home state filing obligations, next please, you can go through these. We're not going to spend any time on them because they're included in this presentation, but you should by all means contact your home state and find out what your tax obligations are, what your filing deadlines are, and how you can file extensions if you want to file extension of time to file. But those of you who live in Alaska, Florida, Nevada, South Dakota, Texas, Washington State, and Wyoming don't have to worry about paying state taxes. They don't have any. Get rid of this slide. Okay, we have 3 forms here that we devised to help people, and they are on the website, so you don't have to try and, you know, look at them here so much, but we're going to go through them together just quickly. It's our volunteer income tax assistance information checklist. It's got 2 columns. On the left, it's all kinds of income, what you might have, and that you should organize it. It's a great checklist tool. It covers everything from W-2 forms, all kinds of 1099 forms, including that new 1099 NEC. It's got the new information about the stimulus money, whether or not you have alimony, prize winnings, scholarships, and so on. In the right-hand column, we ask you to organize your deductions. Medical expenses, charitable contributions, for those of you who are going to get that $300 above the line, mortgage interest, real estate taxes, childcare expenses, alimony paid, any contributions that you made to retirement plans that were not through union. Remember, your union work has your retirement paid by the employer. That's why it's so wonderful to be a union member. It's part of our collective bargaining. But if you're also running a parallel retirement plan of your own, you have your own SEP IRA, you have a traditional IRA, you have a Roth IRA, you might have some of these plans as well for yourself. We want to know about them. Your tax preparer will want to know about them. We also ask about rent. Well, why do we ask about rent? Because there are renter's credits in a number of states across the country. So we always include that here so that we make sure that you're getting every credit that you can on your state tax returns. And then we ask you to organize your business and your auto expenses, travel expenses, investment expenses if you have them, college tuition and student loan interest costs. If you paid extra state tax last year when you filed your returns, if you paid any estimated taxes, those of you who are self-employed usually do this, you send in some money quarterly. We ask you to organize it here. And last on this right-hand column is if you paid extensions, you can make a note of it here so that when you have everything ready for your tax preparer or you go to file your own taxes, you can use this as a checklist. Next, please. And this is your showbiz expense, performing arts professional expenses. I'm not going to dwell on these one by one because we don't have the luxury of time today, but these are the expenses that you can deduct on, in some schedules, on your federal returns, and in some miscellaneous deductions on your state returns. So let's talk about that for a second. We've talked about mixed earners a little bit, right? Mixed earners are people who earn W-2 money as employees and 1099 money as independent contractors or self-employed people. Sometimes you have a business that maybe is show business related, but it's all you. You do it. You're a coach. You are a playwright. You're a choreographer. You're a music director. You're a director. Whatever you are, you do books on tape. And sometimes you have a business that has nothing to do with show business, right? Maybe you're a website designer or a dog walker or a caterer, whatever you might do that brings in that self-employment income. If you have expenses against your employee income, I'm afraid to say there's little or no place to put them on the federal return. But should you keep track of them nonetheless? Yes, you should, because many states allow you to deduct those expenses on the state returns. New York, Pennsylvania, California, there are others. So I want you to be aware of that. Also, if you have self-employment income, those other gigs that you do that are that mixed earner, you can deduct your show business expenses from this list against that income to the extent that it applies to that income. And most of it, if it's show business related, will. So you can use these expenses to reduce your self-employment income. That's why we ask people to keep track so diligently of these monies. Now, I know a lot of you are thinking to yourself, well, what if it's union dues? And what if it's my agent? And what if those are kind of esoteric. And if we have time, we might get to some of the, sort of parsing some of that, but I won't go into it now. I just want you to be aware that everything from audition expense, advertising, agents' commissions, automobiles, coaching and classes, equipment, gifts, internet, makeup and hair, office supplies, studio rental, repairs and maintenance, research supplies, stage manager's supplies, tax prep, telephone, research tickets, tips and gratuities, trade pubs, travel expenses, transportation looking for work, union dues, wardrobe. They're all ordinary and necessary expenses, and we have argued for them for decades, and we win them in audits virtually every time. So keep track of these. They're important, and they relate to your deductions, but also to your profession. So next, please. What have I got? I've got out-of-town travel. I won't spend a lot of time on this either, except to say, if you are out of town, either working or looking for work that requires an overnight stay, that's important. That's why it's capitalized and in bold letters. Overnight, you may deduct the travel to and from, lodging, tips and gratuities, laundry and dry cleaning, local transportation, if you've had to rent a car, and ancillary expenses that might relate to that. Again, this is if you're looking for work, so you have an audition somewhere and you do it on your own nickel, you buy your own plane ticket, you pay for your own hotel room, you rent a car, and you go and do an audition somewhere. If you're working out of town, and most of these costs are covered, but not all of them are covered, those that are not covered are deductible. And you'll see that meals are separate at the bottom, and it says the preparer will take a standard deduction, but you should be prepared to keep your receipts in the event you are audited in your home state. And we've seen a lot of this throughout the years. A federal meal allowance is allowed on federal returns, but many states do not allow that same federal meal allowance. So I always recommend that people keep their receipts when they're out of town, or make good calendar entries in their, electronic calendar, just to make a note of how much they spent on their meals as they go through the day. Next, please. Last but not least, automobile expenses. For those of you who use your automobile for business expenses. And what are business expenses? Looking for work locally or out of town, right? You're driving to auditions, either in your local area, or you have to drive out of town to an audition. If you're working out of town and you have to provide your own automobile, driving between two jobs on the same day. If you have two different jobs in the same day, so you've got some kind of a day job, and then you go from there to an evening job, and you're driving your car between those, that's considered business mileage. And going to or from classes or courses or some research. So you're using your car to go to a TV acting class at night, or a theater acting class at night, or wherever you might go for your continuing education, keeping your skills up. If you're going to see a show and you're doing research, that mileage is considered research deductible, business miles. You're going to a film, a theater event, a concert that might relate to something that you're doing in your work. You have to keep track of all of these starred items. You must keep track of these because audits on automobile deductions are onerous. They want to see a contemporaneous log of all of your miles. They want to know how many miles you put on for the whole year from January 1 to December 31. How many of those were for business? How many of them were personal? How many of them were commuting, driving back and forth to work every day, which is not deductible, but they still want to know how many. Now, did you also drive for charitable reasons. Do you do charitable work? Do you, deliver Meals on Wheels? Do you, visit shut-ins, nursing homes, hospitals, and what have you, and perform volunteer service? That mileage can be deducted as charitable miles, and it's considered cash. Yes. So if you do charity, you can use that for your above-the-line $300 charitable deduction. Medical miles, driving to and from doctors, therapy, hospitals, what have you. All that mileage is deductible as medical miles, and you would keep track of that separately as well. This year, the standard mileage rate for business miles is 57.5 cents. It's down 1/2 cent from last year. And guess what? It's going down again next year to 56 cents a mile. So they just figure operating a car is cheaper every year. Sometimes it goes up, sometimes it goes down. Moving miles are no longer deductible for people unless you're in the military. So if you're a member of the military and you have to move, it's work related, you may deduct moving miles as well. Parking and tolls are also on this sheet. You should keep track of them because they can be deductible. Next slide, please. I'm not going to spend a lot of time here except to say that home office deductions have become the big question because everybody's working remotely. Well, the rules have not changed. You have to have a separate, an exclusive place in your home that you work. You have to use it regularly. It's got to be the principal place of that work. And it's got to be for the convenience of your employer. So if your employer has not given you a letter that says you are required to work from home because you are not provided office space in our offices or our headquarters or our facilities, then you can take that deduction. If they don't give you that letter, you probably can't take it. So I wouldn't advise it. If you're self-employed, make sure that you also verify that nobody's providing you a place to go in and do your work. Some people are consultants and they really don't work from home. They go into offices all the time. Some people do work as independent contractors in schools or in corporate settings, and they don't do the work at home. So check with your tax expert on this to make sure that you qualify if you do, but many of you will. Many of you do, especially with COVID. Next. And what you have to do, if you have a home office, you have to measure the home space, you have to measure the business space, and then you apportion what that is if you're going to take the actual expenses. So if you want to add up all the expenses of operating your apartment or your home, you're going to have to, take that ratio and apply it toward those expenses. Or you could just measure your business space and take what is called the safe harbor deduction of $5 a square foot. I recommend that. It's easy, it's fast, and there won't be any tax ramifications later if you sell your home. If the home office you're deducting is one that you own, then I would recommend, yes. I don't see, I'm getting a note here. Okay, I don't know if it's for me or not. Okay, it's not for me. Never mind. Next slide, please. Oh, and now it's your turn. Perfect. I hope I got here at the right time. Did I?
Hi, Sandra. You actually, let me just say this. How fabulous are you? Oh. It is the information. I'm like taking notes and I'm hearing all this. I know everybody else is. We have really filled most of the time. I know you can't help it. It's just so important. I love the idea that you can deduct your volunteer driving. Anyway, I never knew that. Anyway, so what I'd like to do, because unfortunately, we're going to have you back. I would like to do like 1 or 2 questions and then we need to go. But people need to remember that they can reach out through, going they have questions to Sandra, send it through to the email that we had put forward earlier, SAG-AFTRA.org. There's a place for that for the PTEOE, and then we can go and hopefully get you connected. So that being said,
last year we got answers back to people, so it's not different. I mean, it's not impossible.
Right.
It's a little
so I actually have several questions, and what I'll do is I'm just going to do 2 of them now. And again, you guys, I'm sorry for those of you who I missed, but you can write in if you did not hear the answers. So I was fortunate to book work on a production that was shot over Zoom, and the production was based out of New York, which is my legal address, but I was living out of state at the time, as it was during the height of the pandemic in the city. Not that I'm looking to pay extra taxes, but do I need to file multiple state returns?
That depends, right? On everything in tax depends. It depends on whether or not you were an employee or an independent contractor. I don't know how you were treated, but if you worked, if your work was generated from your home state, and you were an employee, I would check with the paymaster to find out what state they withheld. If they withheld more than one state, you're going to have to file in more than one state. But take heart, you won't have to pay tax in more than one state. Virtually every state in the country allows reciprocity with your home state, and they give each other credits. So if you live in Connecticut and you work in Pennsylvania, Connecticut will give you a credit against the Pennsylvania tax that you might have paid there if you did a gig in Pennsylvania. So don't worry about that, but you'd have to find out from your paymaster if they had that withholding. If you got a 1099 form, they would just send it to your home address. So I would just file from my home and I would include it in my home state tax. That's the way I would treat it.
Great.
I hope that answers the question.
I think you did great. I actually, this is the last one I'll take now, and I'm sorry to everybody who we can't, again, that we can't take all the questions, but you talked about earlier the CARES Act and the different packages that have been coming forth and what we're trying to look at. I think it's important because members really do need to know that we try to work not only within our organization, but what we try to do legislatively to help our members in their work. So the question here is, do you think Congress will vote on this year the tax change bill that includes restoring business expense deductions for people in the arts so they are not restricted to 1099 income?
All right, this is the question we all have on our minds and coming out of our mouths at every moment of every day. I actually think this is probably going to be the year. I don't want to predict it, but the qualified performing artist provision that was enacted in 1986, when I was a mere child, no, I wasn't, but I was a grown-up, but a very young grown-up, has not
Reagan who was old.
It has not been updated in all these years. We have made a couple of attempts to do it, but things fell by the wayside. There were other public policy things. We either had a government that wasn't interested in it or one that just didn't get around to it. Here we are again without any of our expenses on the federal return, and SAG-AFTRA and Actors Equity and other entertainment union support, lots of it, have promoted a modernization of the Qualified Performing Artist Statute called the Performing Artist Tax Parity Act, PATPA. It's kind of like the President's Task Force on Education, Outreach, and Engagement. You can say it, but you can't say it. Anyway, but it's great. They're both great. And we have bipartisan support. We have lots of members of the House signed on to it. We have members of the Senate now coming onto it. Our lobbyists are hopeful and optimistic that this is going to get through in a tax bill that will be forthcoming. I will hope, I can't predict, but I will hope it will be within the next year, because I think we're poised to do this. I think there's reason for it. The entertainment industry is crucial to not only the economy of this country, but to getting so many sectors of our nation back to work. Not just people who work in the performing arts, but people in hospitality, people in manufacturing, you know, people in retail. I mean, all these people are involved in entertainment. So we bake the bread and we feed a lot of people, and Congress knows this. So I am hoping, Gabrielle, and all of you, that this happens. I am working very hard on it,
Yes, you
as
are.
is Gabrielle, as is Rebecca, as are my sisters and brothers at Equity, as is IATSE, as is the AFM. I mean, we're jumping in here, doing the best we can, and we will keep you posted. So there might be light at the end of the tunnel here, and you'll be the first to know.
Yay, we're very excited. The work's been exciting in Washington, and all these years, I do know it's going to happen. I believe that. So we really are at the end, and it's just, I'm sorry to everybody again, but thank you for this incredible discussion. You are truly inspirational and a leader. Thank you, Sandra, for this. I can't tell any of you enough how much we appreciate you joining us in these live stream events, and that you're able to take time out of your schedules to be with us. It's really important. So on behalf of the team here at SAG-AFTRA, we want to thank you all. And it's been a pleasure being with you today. Special thanks to each of you who have been tuning in every week for our President's Task Force on Education, Outreach, and Engagement. It's really been really exciting, some of the information that we've been able to put forward. If you have not already, while you're here, please remember you can subscribe to SAG-AFTRA's YouTube channel to get updates on the great content that we will continue to post for you. Thank you. And as Sandra says, it is all about you and your needs. Have a great day.